stocks. Airbnb going public today in one of the most anticipated IPOs of the year. Company priced its IPO at $68 a share. That's much higher than the original range established earlier in the week. It brings the valuation to $47 billion. By the way, at one point, people thought the company was worth $18 billion. Pre-COVID, there was a view that it might have been worth just north of $30 billion. So it's a remarkable thing to consider where we are right now and the optimism that this market has, not just around the market more broadly, but of course, travel and what the world may look like post a vaccine. I spoke with co-founder and CEO of Airbnb, Brian Chesky, and asked him about going public. Traditionally, given the SPAC frenzy that we seem to be talking about virtually every day.
You know, I have a lot of respect for a lot of the people that reached out to us, and it was very humbling to see that, we had a lot of interest for a lot of different proposals. I think that fairly early on, actually earlier on, we had contemplated a direct listing, but, I think an IPO just became the very obvious path for us because, ultimately, I think Airbnb is a kind of different kind of company. It's not like other companies. And so we wanted to just have the opportunity to tell our story and what makes Airbnb to as many people as possible. And so I think an IPO is a very good way to be able to tell the story to the most number of people. So when they consider buying stock, they know what they're buying. I think that was very important.
Bill Ackman was reportedly one of those SPACs that did approach Airbnb. They were turned down, and here we are with the IPO today. Most importantly, I asked Chesky about Airbnb's path to profitability.
We were, as you saw on the S1, EBITDA positive in 2018 on an adjusted EBITDA basis. I think that the way to think about it is we think this model has really good long-term inherent margins built into it. Now, the thing about Airbnb is we had to do a lot of hard work to get this company going. We had to design this system of trust. We had to build our own payment system. We had to invest in trust and safety to be able to make sure that two strangers could live together. We had to be able to localize our product in 200 countries and regions all over the world. We had to invest in building a brand that's known as a noun and a verb all over the world. So we had to build a lot of difficult things. We made a lot of investments. I do think, as you see in 2019, we were over an investment hump of sorts, and I'm feeling really good about what the nature of the profitability for this company is on an ongoing basis. Because at the end of the day, this is a primarily capital-light business. It's a community. Communities are extremely scalable, but you do have to invest in them if you want to build a truly global brand of hundreds of millions of people, and that's what we've really done.
So for the investor class out there that's thinking, should we be buying into this IPO? One of the questions they invariably ask is, who's the comp? What's the comparable company to think about? And of course, there are the Bookings.com and the Expedias, and then there are the hotel companies on the other side. Where do you think you fit in that mix, or do you fit in a different mix?
We fit in a different mix. I mean, it is very hard to give a comp. We basically said we created a new category of travel, and so therefore we're in a category of one. I mean, the OTAs, Booking.com, Expedia, they're really distribution channels, mostly for hotel rooms that existed before them. They don't do all the services and all the tools that we do. So we don't think that's the best comp for us. And obviously, we're not a hotel. That's pretty obvious as well. So we really do think we're a totally different category, and investors are going to have to probably value us, just by looking at the fundamentals of the business.
Shepard Smith here. Thanks for watching CNBC on YouTube.